Hello, everyone. We're delighted to have you here today. This is our video presentation for our Backtester project. First of all, I'd like to introduce ourselves. My name is Chan Yao. I'm a computer science major at UC Berkeley.
My name is Matt Malitz. I am a computer science major at UIC.
And I'm Tommy Clark. I'm a physics major at Caltech.
Yeah, so the reason we made this was that there was a lot of thought and a lot of takeaways around this project that we got, and we didn't think it might come off just by viewing our Git repository. So just to give a quick overview of what we're going to be going over today, I'm going to start off with an example showing our backtester. So I'll give an overview of what pair trading is, then I'll actually execute that. After that, we'll go into a bit of our motivations for making this project. After that, we'll do structured design, and then we'll end with things we learned and a conclusion. So without further ado, let's get started. So instead of introducing our project by going directly into the code and our structure, we wanted to first show you guys an example of our backtester at work. And to do that, we decided to show a pair trading strategy. So pair trading is one of the more basic statistical arbitrage type trading strategies. And it's based on the assumption that given two highly co-integrated securities, that in the long run, their difference will revert to a mean value. And to demonstrate that a little bit more clearly, we've provided a scaled plot of two securities, the ones that we're going to use in our example, wheat and corn.
So here's a plot of two securities. As you can already see, the graphs generally move together, which will explain why the co-integration value is so high for these two securities. Now, given that the graph is scaled, this means that we would expect these two securities graphs to look like this together, as in there's no deviation between them. And as you can see in the graph, this isn't the case in a lot of different spots. So based off our strategy's logic, this would mean that we would want to long the underperforming security and short the overperforming security, which would be basically our best avenue to make profit.
So here are the results of our co-integration tests, given in the form of a spreadsheet. And it's worth noting, this is not our actual backtest. It's just some preliminary data evaluation to pick the actual pairs we're going to be using in our example later on. And to dissect this information a little bit, this top row right here is ounce and skull, which are both gold ETFs, and it has the highest T statistic, indicating the strength of co-integration. And you might be wondering why we didn't pick the highest strength of co-integration for our example. And the reason is that pair trading on gold ETFs has been known for many years to be, or has been out there for many years. So the opportunity for profit has been virtually eliminated. The difference is just always going to converge too quickly. So the spread, as we mentioned earlier, is just going to hover on zero. And so because of that, we wanted to pick something a little less conventional, that is not going to suffer the same drawbacks. And we ended up going with corn and wheat, which you see is right here. And the strength of co-integration is still relatively high, making it a good candidate. And intuitively, this makes a lot of sense too, because corn and wheat are both in the agricultural industry, and you would expect their prices to be related. To give a quick overview of our backtesting and strategy components, and we'll go more over this more in our design section, but the backtester handles the simulation, dates, prices, etc., whereas strategies will manage the decision-making part of our process on a day-to-day basis. And here you can see in our example here, it's our pair trading strategy with corn, wheat, with some other parameters listed here, such as our entry and exit bounds, as well as a look back in other windows. And after the simulation is run, the backtester will output some diagnostic values that you see here, such as sharpened total return. And now let's run our strategy and see what results we get. And here you see a plot appears of our spread. Just zoom in a little bit. So this would be where we short the spread and close that order. And this would be an example of where we long the spread and close that order. And then you can see that correlate to action reports printed out in the terminal. And then at the end of it, we have our Sharpe value and total return. So Sharpe is, for those of you who don't know, Sharpe is the average returns over the standard deviation of the returns, or in simpler terms, reward over risk. And the reason we use Sharpe over total return typically when evaluating performance is that we can leverage our strategy to achieve the same returns. So that's not as important as it might initially seem. And then after we end the actual backtest, you can see that a text file appears in the logs folder with the title being the pairs we traded along with our parameters, so we can keep track of what this strategy was actually testing for. And to look at the first line here, just as an example, and we'll go over the key a little bit more in depth in our design section, but this is saying that we had a long order of corn at a value of 0.02, and then a short order of wheat at a value of 0.05 approximately. And this is actually just a unit of our spread, and it just happens to manifest in two orders because the spread is just the combination of two opposing prices scaled.
So here I'd like to discuss the motivation for why we actually built the backtester, as it might be kind of weird. Why would you write this entire thing if others already exist in the market? Well, to start out, we first looked at backtesters that didn't involve any coding, like just simple drag and drop backtesters. You'd have like a stock and you drag, oh, I want a simple moving average strategy for this stock. And it put it, long story short, they were just terrible. You could pretty much do nothing in them. They were very simple strategies and they weren't really anything we wanted. This was when we found actually the next big backtester that we wanted to try out online that was free, and that was Quantopian. We actually thought Quantopian for a while was actually what we were going to use. It had an amazing layout for data. It showed you so many interesting statistics for your portfolio, for what your strategy was doing. It was very cool. You can take a look at it. It's the picture to the left right here. Very nice. But there were a lot of problems with it. First one being the pipeline, which is basically how you get all your data before you go into Quantopian. The way Quantopian was structured was actually that you would have your data where you'd actually calculate everything you needed. Then you'd actually make your strategy using that data you calculated. And then that strategy would then be put into the backtester, where the backtester would do everything that it needs to do, looping through the days. However, though this structure is pretty good, the pipeline, which is where you make your data, was just really badly done. It was very hard to do anything that was creative at all. You couldn't do anything that like wasn't already in the libraries. So like MACD was something that we really wanted to try, for example, which is an indicator for stocks, and we couldn't do it. It just wouldn't work in pipeline. It was a really big letdown. And it mainly showed us that we couldn't use Quantopian. And I guess to sum it up, Quantopian had an amazing format, but it was just way too restrictive to use. It didn't do anything that we actually wanted to do. That was like something like anything that we wanted to do that was advanced, we just couldn't do. I mean, we wanted to try machine learning. We couldn't do machine learning. We wanted to do pair trading. We couldn't do pair trade. And to feed the purpose of using Quantopian. And that's why we ended up writing our own.
So as Matt said, the Quantopian platform is very user-friendly, and that the strategy and backtester had minimal communication. The trader could simply create the strategy and then pass it into the backend, and the backend would perform all the work behind the scenes, and the trader wouldn't have to necessarily worry about what's going on back there. However, Quantopian didn't allow us to use our creative freedom and customize this backtester part. But in our new platform, we wanted to recreate this separation. So we had a strategy file, which would then create order strings. And this was the method by which it communicated to the backtester. It would output order strings, and these order strings would then go to the backtester, where it would perform the desired actions on the portfolio, which was also included in the backtester. And then the trader would get back an output and be able to analyze that data. This had many advantages for us. First of all, there was increased flexibility among the programming languages we used. Since strings are more of a universal language, they don't require specific libraries, or the functions aren't necessarily easily adaptable between languages, but strings, we simply can output a string in any language really and recreate that from any other language, allowing us to easily adapt this backtester between different languages. It's also very user friendly. You don't necessarily need to understand what's going on in the backtester in order to create a strategy, create this output, and understand exactly what's happening. So for example, we might pass out a string from the strategy class that would have a certain date and time, but it would be just an open order for corn. We would long about 30 shares, and then we would also create an open order for wheat, which we would short 72 shares, for example. This string would then be passed into the backtester, and it would execute these actions appropriately. We could also have a target percentage, where we target 45% of our portfolio in corn and 55% in wheat, which would then be executed by the backtester behind the scenes. That creates a nice way for the trader to see what's going on while also allowing for the adaptability that we want. These also help create the self-containment of components, which was a very important aspect to us, because by self-containing these different files, we were able to allow programmers to alter these and customize the backtester as desired without destroying its current functionalities and preventing it from working in the future. So the backtester contains 4 main components here. You'll notice that the strategy component is missing by design. The strategy component is to be made by the trader, and the trader simply has to have it output the action in the desired format. The backtester component then loops through dates and times and performs the strategy on a portfolio object as the strategy says to do. The portfolio object is pretty simple. It contains the open positions, the assets, how much money is in your account, and the total portfolio value. We also have an order object, which is simply a symbol, a type of order, and a quantity as dictated by the strategy. We also have a utilities component, which is closer to miscellaneous functions that you might need in order to perform a certain order type or execute the strategy. So with a semi-finished product here, we are trying to ask now where we want to take this in the future. And it's always been a primary interest for us to take it to live market data. At first, we want to create a scanner where we can take the same strategy that we used in the backtester, pass it into a scanner, which tells us how that strategy is performing on live data. Eventually, we'd like to make it into a full-time trader, which would connect to bank accounts and actually make these trades for ourselves. That's down the road. We would also like to make a machine learning type interface where we can easily test different strategies. One of my favorites is the dimensionality reduction and its application to pair trading and helping us find new pairs that might otherwise go undetected. But it's needless to say that we've learned a lot through this project. It's been a great time, and we've gained a lot of valuable lessons.
Yeah, and despite all our research and programming, I think like one of the biggest things we all took away from this was actually soft skills for like not only collaboration and communication, because we did a lot of that and a lot of planning in our meetings, but it really taught me how one should take a passion and turn that into a project or execution. And this was actually our 3rd attempt at making this backtester. So we had a couple of failed projects, and we just kept on coming back to it. And the process was incredibly fun. So in the beginning, we would research technical indicators, learn about different strategies, and just kind of stumble our way around making this and structuring it. But what it taught me was one thing you really need to do is after you've had that initial honeymoon phase of this really interests me, to take a step back, collect yourself, use the resources that you've built up and build a vision, think about how you're going to execute it, and then do it.
And I think for all of us, patience was a huge takeaway here. We're used to projects where you can simply just jump in and get it done quickly. But this project was definitely going to be a more long-term project, where we needed to see where we wanted to be in a few months, where we wanted to be in a few weeks, and try to meet those goals without simply trying to get everything done right away, and have more of a game plan for how we were going to execute this project and make it how we desired.
Yeah, I mean, piggyback off Tommy's point, I would say that the biggest thing that I feel like we learned was planning. I mean, when you think about it, in most computer science classes that you take in college, everything's kind of already planned out for you. They kind of give you a general blueprint of how to do everything. We didn't have that here. We actually genuinely had to come up with a plan of how to do stuff. I mean, and it's hard. That's why we had 2 other versions that failed, and this one worked. And I think that was just an incredible experience. I mean, it's one that you really can't get in college unless you're doing like some research. And with that said, I'd like to thank everybody for watching this video presentation of our backtester. It means a ton to us that you guys will sit through this and watch it. It's honestly the most amazing thing in the world. If you have any questions and you have our emails, please email us. We love it.